And I've got to ask you, just to stick on the US dollar for a second, because obviously it impacts everything else. But in terms of your expectations, is this the trend that we should now be following in terms of a little bit of a wind back in the DXY, or do you still see that it could reverse what we have been seeing over the course of the last couple of days and pop higher again?
So I think in the near term, you could probably see this dollar weakness extend a little further. Especially as I said, a lot of the drivers have been more durable in nature. But in some sense, it feels like you're still not out of the woods yet. I mean, it's still early to call an end to the broad dollar move. The Fed is still likely to hike much further. G10 rates are going to be relatively lower compared to the US, and with the rest of the world kind of still weak as far as growth goes, it's hard for other currencies to step in and strengthen materially against the dollar. So in short, this momentum could extend a little bit more on unwinding and some of the factors I mentioned, but I doubt it's going to extend beyond, say, another 1% or 2%.
Speaking of, I suppose, intervention and what we've seen coming out of Japan, but also, I suppose, to an extent, what we've seen happening over there in China as well, do you think that this is the way that it's going to be moving forward, that you're not going to see any kind of coordinated intervention, that it's just going to have to be on a case-by-case basis, these countries that aren't accepting of the volatility that they're seeing in their currency markets because of all the speculation, that they're just going to nibble at the edges until the Fed finally stops aggressively hiking?
Yeah, so, Asian central banks generally hold the largest dollar reserves in the world, and they are going to use that as shock absorbers in a way. We've kind of seen, the Japanese authorities stress levels now with dollar yen. For them, this monetary policy divergence is a little bit of a challenge, especially with wage inflation still relatively contained over there. So they are naturally intervening. As far as China or PBOC goes, the natural supply of dollars is still, positive. If you look at the trade surplus, if you look at dollar holdings amongst domestic market participants. So I think what just happened was, probably people looked at the sell-off in China equities, looked at a little bit of no positives from the NPC that they could latch on to. And that interest triggered a big move higher in dollar China, which kind of ended up hitting the top end of, the PBOC's fixing band, which in a way would have prompted them and state-owned banks to intervene. And you've seen that unwind. Now, it happened in a more generalized fashion, which has accelerated the move lower. So I think